The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed. For a full list of current recommendations and stocks owned by staff, members of Intelligent Investor can visit www.intelligentinvestor.com.au.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today for the first Stock Take of 2021, our analyst James Carlisle. Hey, James.
Good morning.
And all the way from Melbourne is analyst Mickey Mordek. Hey, Mickey.
Hey, Gaurav. Hey, James.
Is it too late to say Happy New Year, fellas? It's, early February now, I think.
No, we can say Happy New Year to all the members.
We can. We better do that. Someone better do it. Happy New Year, member.
I'm just surprised we actually made it back onto the podcast because last year, at the end of last year, you said you were going to get all these fancy guests on, and
I've been working on it.
People are going to be really disappointed when they hear we're back on it. But
yeah, I've been working on it. I got a few interesting guests in mind, actually. The tricky part is coordinating times because we no longer have a recording studio anymore. It's all over Skype, and we've got special equipment, and they don't. And yeah.
So until then, we're just stuck.
Then.
Yeah.
Well, there's still plans afoot. Speaking of plans, Mickey, you came down to Sydney for a little while and disappeared again. How'd you find it? What's going on in Melbourne?
No, it was good. No, it came up for the development session. When I spent a bit of time in the lovely
orange zones.
Yeah,
managed to avoid the reds.
Yeah, it was actually quite stressful traveling interstate, especially from Victoria, because you're never sure if things are going to change, and just making sure that you've got to actually look at the map and figure out if you're in an orange or a red zone, and it's almost not worth it. Like, I wouldn't do it again. It just was too.
Oh, it was good
too
to
much
see
effort.
that, Mickey.
So, well, I mean, not until things
come again,
normalized. A little
it was an
bit.
awesome day, though. That day we had we had a development day with Greg Hoffman and all the Sydney-based analysts, and it was marvelous. It was terrific.
The virtual reality was pretty great.
We found an excuse to visit a virtual reality game center and played around with zombie apocalypse.
Just to see how the old VR is coming along.
How VR is coming along. Yeah, that was good. That was good fun.
Yeah.
We should write something about that. Or we should do it again, actually.
We should do it again first, and then maybe after that
write something. That was great fun. I won that as well. That was the best part.
You did not.
I got the
you had the highest kill ratio, but I had the most kills.
Oh,
and that's really the point, because when you're being attacked by zombies and you've got unlimited ammo, it's not your kill ratio that you're worrying about.
And how many zombies have you been attacked by, James? I think I've got more on you here. I've got kindy age kids.
It was new. It was new. A new one for me. That's for sure.
It was amazing technology. There's a listed company actually. It's called IDZ. I can't remember.
Indoor skydive, I think.
Is it still called indoor skydiving? Yeah.
Well, maybe not. Maybe it changed.
It's just.
Well, that looked amazing as well, didn't it? We didn't do the indoor skydiving, but
it says Indoor Skydive Australia. Yeah.
It's a bit. I think it's like a $5 million business at this stage. So after 20 bags, we can probably start looking at it for an investment. Now, speaking of bags, James, you've been looking at the travel sector, and we've been.
That's a fantastic segue.
That's a pretty good.
Carry on.
I know. The break probably does some good, eh? I like what you've been thinking about, actually. I think one of the hardest things is making a tough decision, and buying the travel stocks really at the height of the panic was a tough decision. We got in probably before everyone else thought of getting in, and where people were still panicking about the industry. But then to suddenly turn around and come to a different view, I like the psychological flexibility. James, tell us why exactly you're looking at travel stocks through a different eye.
Well, it's interesting, isn't it? The interplay between probabilities and events, and you could say that, now that we've chosen to say to get out, maybe it was wrong to get in the first place. But I think everything looked very different back then. It was certainly, there was a lot of uncertainty for how the world looked. We're not talking about sort of last March for Webjet, and I think more like June for Flight Centre. And things looked very uncertain for the next 6 or 12 months. But then it seemed at the time we were being told that the coronavirus was much more stable than flu. And I think that was a main factor, so that you could actually imagine, um, you know, the thing playing out with, vaccines appearing, and then during 2021 just gradually getting back to normal. Um, and that's how things looked really until December last year. And all of a sudden, we started getting these variants. And the thing that the variants have done, places that look like they might have a decent amount of herd immunity and might actually be sort of getting through the other side of the pandemic, places like London and Manaus in Brazil, particularly, um, suddenly had these huge surges. And it still isn't really clear why, although it is thought or known, I'm not quite sure, um, that they've been, hit by different, slightly new types of the virus, like little variants. Um, and Manaus, I think they did serological testing to show that over 50% of the population there had antibodies, and antibodies don't necessarily last, and you can get the T cell immunity, even if you don't get antibodies, I think, and that sort of thing. So it's likely to undercount the number of people who've had it. So in Manaus, perhaps 60 odd or 70% of people had it. And then you've got this huge surge going on now. And that's in the middle of summer. Uh, in a jungle. So so things I think have changed. Now it may be that we're jumping at shadows. I hope we are, but it creates a level of uncertainty, which I think that once we made good gains out of that bet, for better or worse. And I think sometimes rather than sort of sitting on the sidelines and thinking, well, I wonder how this is going to go, and you can think about that for a while. Um, the time to act, I think, is early in these sorts of situations where there's been a change, we're uncomfortable, so let's hit the sell button, and we can then watch. I just think it's very hard now to see how. I mean, AstraZeneca are now talking about getting. They say they're going to have a new version of the vaccine ready by the Northern Hemisphere autumn. So what's that, sort of September-ish? Um, I think there's a chance. So we're all going to get vaccinated with the AstraZeneca vaccine. I think there's a chance we'll need to all get vaccinated by the new vaccine before we actually even open the borders. And so, because people are going to be worried about variants coming in. Now, I think that what they reckon is that the existing vaccines have some efficacy, but reduced efficacy against these variants. That's the thinking at the moment. So, you really, given our tolerance for COVID in this country, I think we're going to want to have that second vaccine. So it sort of makes you wonder, doesn't it? We're going to this first vaccine's almost redundant.
Yeah.
Well,
So
it'll be very important to vaccinate the quarantine workers, having said that. But with the borders still closed and the quarantine workers effectively vaccinated, hopefully we'll be safe through winter. But anyway, it creates this level of uncertainty, which I'm
So
just
it
not
sounds like
comfortable with.
there are two things you're pointing to, James. One is is a change in the virulence of the virus and questions about the vaccine, and that probably, as you say, raises questions about when international borders can reopen. But the second one, I think you've touched on a bit, but maybe we can expand on that a little bit now. Is the change in the valuation in some of these businesses? Remember, they've raised a whole lot of capital. The share counts are much larger than they were pre-pandemic. So the market caps of Webjet and Flight Centre aren't too off from where they were pre-pandemic, and yet the external environment has completely changed.
No, that's right. I think you have to be slightly careful with that sort of calculation, though, because you've got to remember that they did also raise hundreds of millions of dollars of of cash at the same time. So that has to come into the equation. I mean,
So they're holding lots of cash to offset the market
well,
cap.
yeah. So when I mean, I suppose the way to look at that, they had to bring in lots of cash in order to offset their negative working capital situation as that unwound. But I suppose the way to look at that is that when that starts to wind up again, these things should spew out a lot of cash. So all I'm saying is that you can't just divide the share price by half or whatever because they raised twice as many shares. They did get the cash that came with that, albeit at low levels, discounted levels. But so the point is that the valuation is it all looks a bit different now. The way I looked at it, the article I wrote recently, I mean, I just said for sake of argument, if they got back to the same level of profits as they were at in 2019 with the new share count, I think that puts Webjet on a P of almost 20 and Flight Centre was on 12. But Flight Centre remembers closed half its retail outlets, so it's going to be a big thing for it to get back to its pre. That's not going to happen for some time.
And what about some of the other travel stocks? So we've talked about Webjet and Flight Centre, and your article directly spoke to those two specifically, but there are a whole other parts of the travel industry of various quality. We've always spoken about Sydney airports and Auckland international airports as being maybe the highest quality exposure to travel. Is your advice the same for those companies too?
No, I think the thing is that different businesses mothball better than others, as it were. So while Webjet and Flight Centre are mothballed, the prospects for them, the actual businesses begin to decline. They begin. You can't have them closed for too long. I think before. I don't know. They've reduced the number. They've reduced headcount. That's all of these things has got to have an effect on the culture. All these things within the companies. It's hard to see exactly how they come out of all this. And the longer it goes, the worse it is. That was a risk we were prepared to take when it looked like it wasn't going to be too long.
And they're still consuming lots of cash, aren't they?
Yeah,
While
yeah, that's right. Yeah, so they have a cash burn, and they run out of cash sooner than Sydney Airport and Auckland Airport. So Auckland Airport and Sydney Airport are they mothball much better. I mean, they're airports, and you shut them, and the main value of those businesses is in the asset, and that asset will still be there. They need to do a degree of maintenance. In fact, it's possibly a good opportunity to do a few little bits and bobs, and they have the cash to go. I think at least until 2023. Before they need more money, but they raised it so easily as well this time around. I think if we get to 2023 and they need a little bit more, I think they'd find it quite easy to get it.
do you have some idea about do you have some idea about what the situation for potential cap raisings are for Webjet and Flight Centre?
Well, it's complicated because it all depends on how much revenue they're making. So how long you think they can go depends. It's very sensitive to that. So I think without if you assume they're making no revenue, then I think they start to run out towards the end of this year. But they will be making some revenue, particularly in intra-border. A lot of business travel is within intra-regional or intra, within one country. And a lot of that will continue. So they will be making revenue, perhaps quite a bit. It's really the international borders that I'm worried about. I suppose the state borders also in Australia. If a new variant gets in, you can imagine state borders being closed.
Yeah, that's something we probably didn't anticipate early on, that state borders would be shut as well.
Yeah,
I
that's
certainly
right.
didn't think that would happen.
Yeah, no, that's right. And that's made a mess of the summer for Flight Centre and Webjet.
So James, I know you bought Webjet and I think Flight Centre from memory, certainly Sydney airports. What have you done with your personal holdings, keeping in mind that every investor is different and what you do might not be suitable for someone else?
Well, so Sydney Airport I sold pretty early on, actually. After they got above $6, soon after, they bounced pretty quickly, and I decided that because I'd bought them before the lockdown, so the lockdown having taken place, and the share price being a good bit higher, I decided to take the profit in that. Last year I had some losses I could use up from kangaroo plantations. So there you go.
Let's not talk about that one.
Let's move right on from there. That was the fun. That was the geez. If it's not one thing, it's another. Anyway, but Flight Centre and Webjet, I've sold those. I sold those on Wednesday, in fact. So we published the article Friday, and so obviously the way we work things is that we give members a chance to sell first. And with both those stocks, I actually will have to pay. So I won't qualify for the capital gains discount, which is unusual for me. I normally hold on to everything for a year if I don't have the loss, because I've used up that loss now. So so I took I'll have to pay the extra capital gains, which is just look, I don't know what that says, but I just
You were desperate to get out.
Well, look, I'm sufficiently uncomfortable holding them, I suppose. Is sometimes you just reckon you take that on the chin.
Mickey, what have you done in your portfolio? Did you hold any of these travel stocks?
No, I never bought any. I was too scared.
You were too busy buying casino stocks in Vietnam and Cambodia.
Why not? No, I mean, I guess there was a couple of different ways that you could play it during the meltdown. You could go the really pointy stuff, and or you could kind of go stuff that you thought was going to be fine no matter what. And I guess, it was kind of the approach I took was generally just to have a bit in each basket. I think, and so just kind of buy in that way, because you didn't really know how things are going to pan out. But it turned out that that did. I didn't have a particular view on travel either. Like I thought people would travel again, but I didn't know when, and so I just wasn't as close to it as JC. And there was just lots of other opportunities, so I just never bought. What about you?
Yeah. I bought Auckland International Airport, a big chunk of it. I've been eyeing off that stock for years, actually, and so I jumped at the chance to buy it. And I expected when I bought it, I was really happy. And I thought I'd hold that for years and years. And I actually just recently sold it following JC's article, and mostly for the same reasons. Also, I just think there are lots of other opportunities available, and I just needed some cash to fund some of those. I figure Auckland is a brilliant asset. I love the business. I love the opportunity set still, but is it going to double or triple in the next few years? Probably not. And I think there are a couple of opportunities.
Well, in that case, if it's not going to double or triple,
well, I don't get out of bed.
Whatever happened to nice 10%, a nice solid 10% a year? No, I'm joking. I'm being facetious. But look, you got to measure the upside against the downside.
20 years time. In 20, if I were sort of retired and living on a pension, I think my investment style would be different. But given our ages and all of that, I just think I'd rather probably lean into risk at this stage. Yeah, so no exposure to travel for me. I think our funds, I can't remember now. It's been a while since I've looked at the holdings, but I think we still got a bit in Sydney Airport, right?
Yeah, I think so. Yeah.
Yeah. All right. Well, James, we have an official sell now on Webjet and Flight Centre. I think that's a very quick turnaround for us from buy to sell. I think within the space of a year. It doesn't happen too often.
It sometimes happens, but it's annoying when it does because of the CGT. But I think you've got to you just got to play the situation as you see it. It's got a lot murkier, and I think I'd rather I'd rather buy back into these stocks when things are a bit clearer. I mean, they'll be a bit more expensive, but we can you don't have to hold a particular stock. So.
Do you think they're as good now as you thought before the pandemic? Because you held them before the pandemic, didn't you? Or
no,
you did. Okay, no. Right. But do you think they're as good now?
Do I think travel will, in
fundamentally.
5 years' time, do I think travel will be the same as it was before the pandemic?
Oh,
Is that what you're
not
asking?
travel necessarily. Well, I mean, but the businesses themselves, because I'm just, if this
Yeah,
is how we're going to
I
react
think they're great.
when we have a pandemic.
I
Yeah.
think both businesses are very strong. With Flight Centre, I should be clear that I mean by that the corporate travel business, um, and with Webjet, I'm really thinking of the bed bank. Um, but I think those businesses are very strong, and I think that in 5 years' time, I think that those businesses, I hope, will be well positioned. But if it takes, you know, two 2 or 3 more years from now, with sort of outbreaks coming and going, and and then people scrambling out new vaccines, and borders being open and closed, and if they could emerge in 2 or 3 years' time in a bit of a battered and bruised shape, they may have had to raise more capital as well. So there's just those risks. But I think that ultimately, I think the businesses they were attractive going into the pandemic, and I hope that they'll be similar when they come out. But we'll have to have a look at the valuation at that point.
All right.
Yeah.
Let's leave the travel stocks there because we've got a really complicated new business to unpack, Mickey, and that leads us to Eroads. Now, this is a company I had a quick look at late last year, and I was pretty bamboozled by it, actually. I thought, this looks like a pretty complicated company. Better get Mickey on this one. What did you discover when you had a look through Eroads? Tell us about the
Well,
business, how it works, and give us an opinion.
well, I think I was looking at it pretty early, but I just had a couple of other
How
things
did it get
going
on? How did it get on your radar?
Just a friend of mine said get onto it early. Yeah, so it was
The
just
genesis of all great ideas.
pretty
I
much,
just heard
yeah.
it from some guy.
Oh no, friend from a fund manager.
Okay.
But yeah, so I put it on my watch list, but I just yeah, it's just other priorities. Yeah, so I mean, it's an interesting business. It does take a little while to unpack it because it's a little bit hard to actually understand what it does and what the software does. And so the backstory here is basically this is a company founded by a fellow called Stephen Newman. And so Stephen was a founder of Navman, who most people probably know is like
Oh, that's
you know,
interesting. Right.
yeah, the little
I didn't know that.
GPS things in your car.
Yeah.
And so
That would have
he
been one of
found
the first GPS pieces of hardware, right?
yeah, I mean, I don't know exactly when he founded
Okay.
the business, but
Carry on.
um,
Continue. Yes.
onto it early was he, and so he started that business, then he sold that, and then but he was living in New Zealand, and in New Zealand they have what are known as road user charges. And so basically, when you've got a road, there's a lot of infrastructure. They get damaged. You have to paint the lines. You have to, fill in the cracks, the potholes, and build new stuff as the population is growing. So it's really really expensive. And the way that they typically do it is a fuel tax and or vehicle registration. That's pretty much the dominant models globally. Pretty much not because they're the best models, but because they're just the easiest to administer, and you can add a really cheap, sorry, not cheap, really simple per liter, tax to the fuel, or and that's a decent proxy for how much you're traveling on the roads,
Mm.
and but it's not ideal. Like kind of the holy grail would be something that takes into account the actual vehicle type, how heavy it is, what it's carrying, and actually tracks the mileage of that vehicle on the state's roads,
Mm.
basically. So, but actually having one of those systems is really really hard to make, because you need to be able to track the vehicle all the time, and you need to know everything about that vehicle. So it was kind of like um, pretty difficult to actually implement. So New Zealand was one of the weird countries that actually implemented it anyway, and and they did it even though it was just a massive headache to administer all this stuff.
Hang on. So New Zealand
Uh,
has a system where every car has to pay like a usage-based road toll permanently.
Yeah, so not every car, but trucks.
Oh, trucks.
And then
Okay,
so,
right.
yeah. So
Oh,
larger
okay.
vehicles. Smaller
Oh, okay.
vehicles is predominantly still. Um,
But initially, it
on
was
trucks.
all manual, right? So they had to fill in forms. They had to say, right, I was carrying, a ton, and I went 100 miles.
Yeah. So you buy these licenses, and then so with the licenses, it says so this is what the hub odometer says at the start, and this is what you can use it till.
So
Uh,
sorry, so the hub odometer, what
is
a
a
great word
well,
that
it's
is.
I
That sits on your that does that measure the weight of the truck?
the hub odometer is measure it just measures the distance
Oh, it's just
traveled. So
I see. It's just the
it's
distance.
like one of those wheelie things that you clicks when you move it, and if you want to measure like a distance.
Yeah. So it's just the distance. Yeah. So, but it's just the weight that I'm curious about, because that's the thing that
Yeah.
you have some trouble measuring. I mean,
Well,
obviously,
they may have different classes of license. So, for example, if you're a massive semi trailer, or look,
right,
I mean,
right, right,
I
right.
don't want to get into the parlance because of my trucking background, um, it's not the best, but
It's only minor.
yeah, look, I mean, yeah, so so this is how it was done, and
Mm.
obviously that was very difficult. If you ran out of a license while you're in the middle of the countryside, technically you weren't allowed to drive, so you had to get something posted out, and it's quite difficult. You don't know where you're going to be, when you're going to stay.
Posted. Do they, do they not
You
have
have
an
to
app for this?
literally have a physical license in your windshield.
Oh wow.
So this is kind of what companies were dealing with. And
Yeah.
then so Stephen, saw the opportunity, saw that, he's from Navman, he's got that navigational background, and then he's also in New Zealand, so just perfectly placed. And then just comes along with the solution, just a physical tracker that goes into the truck, uploads the data into the cloud, and then it automatically processes new licenses, collects the distance traveled, the type of vehicle, and
And forgive me for sounding obsessive about this, but does it does it track their weight as well?
You do sound obsessive about it.
Well,
Jeez.
well, that's the key component. That's
Yeah, no,
the hardest thing, isn't
I
it?
get it.
I
Yeah.
think because when you drive along the highway here, you see those things off the side of the road, which all the trucks. It's fantastic, isn't it? When you're behind a truck and it just pulls off into one of these things,
Mm.
and that's what happens there, isn't it? They get weighed,
That's right.
and so that's the sort of missing ingredient, isn't it? Maybe.
well, I mean, I think they don't actually weigh the vehicles, like on scales or anything. I think they have different classes of vehicles,
Right.
and so they're basically, I don't know the exact class specifications, but based on if you're a really 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 big truck, you're a class A, and if you're just
Yeah.
a big truck, then you're a class B, and
But
then
the
so
but
on.
the gizmo that they put onto a vehicle
Yeah, so that would have that
measures,
data. Like so
but it uploads
device
what
is
data,
like, and the device is tamper proof, so it's made specifically for that vehicle,
right? And
and so you
it
can't
just logs distance traveled.
distance traveled. And well, I mean, so that's how the product started. That was the basic thing. Now it does a whole bunch of other stuff. So like, it will tell you when you've been driving too long. It will tell you, like, for example, when you get into a truck, you don't just turn it on and get started. You've got to do lots of checks around the truck, before you get started. Make sure everything is functioning correctly. So uh, it walks you through that process as well. And so there's they've added lots of features to this software over time. It's but we're kind of jumping ahead in the story, but I think it's a long story. But yeah, I mean, that's pretty much how they got their start. They rolled that out in New Zealand, very very successful there for obvious reasons. The main thing that they were doing was, if you're like a logging company or a mining company, you're doing a lot of off-road use, so it's not really fair that you're paying the tax. So they could provide rebates for those companies, and so they
Oh.
might be paying 70 100,000 in taxes each year, and they're getting a huge refund. So it's a massive return on investment for those companies. um, So very, very dominant in New Zealand. Tried to roll it out in the US, wasn't as successful. So then they had to kind of develop a new product, which was an ELD, and the ELD has, electronic logging device basically for all truckers is mandated now in the US from 2017, and this is basically where they started pivoting into a more kind of holistic software suite, for fleet management, asset tracking. So that's making sure where all of your different assets are. If you've got a little bulldozer or something and you want to make sure it doesn't go missing, or you've got containers. So they do asset tracking. They do. So now it's like a full fleet management software suite, basically.
Yeah, right. And do they roll that fleet management out into New Zealand, or is it still the basic product in New Zealand?
No, they've got so now they've got it everywhere. I mean, they've got 14 different products. So the thing is, each product kind of needs to be tailored to
Yeah,
that market because it's got unique, compliance and tolling requirements, and so
mm,
has to be modified. But I guess the basic bones of it, vehicle recording, checking the health of the vehicle, checking on the driver safety, collecting road funding, even data analytics and that sort of stuff. So that's kind of the bare bones, and I guess that they can modify it to suit that specific market, basically.
okay. And what's the revenue model, Mickey? How do these guys actually earn?
Well, so there's a physical hub that's placed into the cabin, and that gets some hardware rental fees, and then there's a SaaS model as well. So to actually access that data and see what your truckies are doing, and from head office, then you need access to the SaaS platform, so they get SaaS revenues as well. And then every time that they process a payment for a new license, they're collecting license renewal fees as well. So there's just lots of nice recurring revenue, and it's a pretty high retention business as
Mm.
well. You can imagine once you get one of
Yeah,
these placed in a
inside your
in a
fleet.
truck.
Yeah,
Yeah, yeah, yeah. So I mean, you don't really want to change your whole fleet over. So
that's right.
um, I mean, it's more, if you're downsizing your fleet, they might lose some customers and
Mm.
stuff, but it's not that common. Um,
And so how do they? What's the new customer acquisition like? Can you talk to us about acquisition growth, and do you have any details about acquisition costs?
Yeah, so they don't really break out the exact acquisition
Yeah.
costs, but it is a kind of expensive model. So I guess so. This is a product that costs kind of probably about double like what Xero would for an accountant. Um, or a business owner.
As a
Sorry,
monthly
sorry, a business. Yeah,
subscription.
so but as
Mm.
a monthly subscription. But I would say that their acquisition costs are far higher because you can't just buy the software online and
Mm.
go, we're going to put this in our trucks. They actually have to come, and there's a long sales process involved in actually how many trucks you have, actually observing those trucks and making sure that the physical infrastructure is appropriate for those
Mm.
trucks as well.
Mm.
And so the and also obviously all the extra development that needs to kind of go into like rolling it out to a new market and stuff like that. So this like that, and so I guess if you're comparing this to something like Zero, you would expect that it trades on a much lower multiple, which it does. Um, like in terms of sales, so they're growing really quickly in New Zealand still, and I think that looks likely to continue because they've just, you know, gotten a really good dominant position in that market. They're well known. They're the market leader by a long margin, and there's still further to roll that solution out as people increasingly move to electronic charging. Um, They've had less success in the US, and I think, but I mean, so they introduced that ELD that produced like a very rapid spurt in growth. However, the most recent quarterly was looked pretty disappointing to me, and there wasn't the actual business contracted there. They said that was because of COVID, um, but I'm always a little bit
Mm.
wary. I feel like that could be well true, and I don't see any reason why they wouldn't be. Um, giving you the full picture. But I just feel like that could be the case, or it could also just be that there was a big growth spurt. So it's just hard to untangle
Yep.
kind of exactly what's going on
Are
there.
they actually generating profits in New Zealand, and then they're just plowing those into America, and that's why it looks like it's making losses, or they're not yet profitable in New Zealand either?
No, well, so it depends how you define profit. I mean, um, like with these kinds of businesses, they're kind of you know they capitalize a lot of stuff, and so if you're talking about EBITDA, then they're EBITDA profitable. If you're talking about cash flow, not
Mm.
really. And I think it can be hard to actually separate out the segments because you've got this big corporate, you know, overlay, and it's kind of that's also like a cost center for the business. And so how do you break up those costs? There's a lot of management discretion in, I guess,
Yep.
defining those profits. So
Does it
but I
concern?
think it will be profitable if it's not profitable yet, and it will be nicely profitable. So probably in not too distant future. So I think the key with this is if you could get it close to that New Zealand value, then that would be a nice entry point. But
My concern when I first looked at this was that they're extremely dominant in New Zealand, and yet they're not profitable in New Zealand. I didn't do enough digging to look at the reasons for that, but is that something to worry about? Because for me, New Zealand should be a test case for what success looks like, and I don't mind them funding international operations with New Zealand, but if they can't make a buck in New Zealand where they're already dominant, then maybe the model isn't that good.
mm. Yeah, well, I think like it's always the case with these companies that it's you can make as much profit as you want in a way. Like if they just fired everybody, and then just put it on, kind of just bare bone, like stripped everything back in terms of research and development, I think they could be, very profitable. But um, yeah, so I guess they just keep investing, into the platform. So
Mm.
I think if you look at the unit economics, it looks like they will be profitable. And they already are on a
But
EBITDA
I think
basis.
that's misleading though, because marginal economics or unit economics for any software maker always look amazing, and yet lots of software businesses do not succeed. So, I see this a lot from management of software companies. They always say, forget about the aggregate, look at the unit economics. But of course, unit economics and software look good. That's kind of par for course. That's nothing revolutionary about that.
Yeah. Well, I mean, but if you can kind of establish the reason why they're going to remain dominant,
Hmm.
then I think that's a little bit different. Like, if someone's saying we've got great unit economics, but those unit economics are going to deteriorate, well, then that's a different story. But if you can see reasons why those unit economics should continue or even improve, as like, they become um, relevant. So, um, yeah, I mean, I don't think it's so much that the unit economics don't matter. I think it's just whether they're sustainable or not.
Okay.
I think for like Eroad in New
Just
Zealand,
looks a bit too fiddly to me.
I don't.
It just
It is
the
complicated.
having to
It
develop
is complicated.
new products for different markets, and when they change governments will change regulations on a whim, I would think, on this sort of thing, and that's just a lot of investment. It's not like a zero where you just make a nice core
Yeah,
accounting
it reminds me a bit more
product.
of
And
a GBST rather than
yeah,
zero.
I was
You've got
thinking actually
really
just then.
large.
Sorry, go on. Yeah.
You've got these really large upfront acquisition and installation costs, but once you actually capture the customer, they should be with you for a long time, and then you grow and with that customer as their fleet expands, I suppose, which is quite nice. But
Yeah, but you've got to still tweak
it's not
things
as
if the
nice a business
government
as zero.
changes the regulations, and it just
Presumably, you can charge for that though.
seems
That should be
yeah maybe
Yeah,
that
I
should
mean, it makes it hard to replicate as well.
yeah.
I mean, as you kind of build up this expertise, and you specialize in it. I mean, and you've got to work really closely with the regulators and the customers to
Yeah,
actually get this software right.
I
And
think that's
so
right. Yeah. They have a shot of
replicating
being
it.
quite dominant and irreplaceable. I think that's true. Yeah.
Yeah. Yeah, so I mean, I think it's a good business. I think it's a difficult business, but I mean, it's well run,
Mm.
and clearly well managed. So
How much
yeah,
insider ownership is there in this one?
uh, so Stephen Newman, I think, owns 15%. It's about
No,
$60 million.
quite a bit.
So it's a fair chunk of change. But yeah, I guess I mean the thing with the US as well, as I mentioned this in the articles, there's a lot of competition there too, and
Mm.
so Omnitrax and Garmin, these are um, some really big companies over in the US with bigger market shares, and so I do think that it has attractive features, and especially as cars, become more electric, road user charges could become more commonplace. But I think that's the narrative that's got a lot of people quite excited with this one. Um, but yeah, it's gonna be a tough business, and there's gonna have to be a lot of good execution, I think, to really um, to bring the big prize home.
Excellent
One,
trucker talk
one,
there, Mickey.
one,
Good
one
stuff.
to watch, I think.
No, you've done really well to unpack that. It is a
Yeah.
complicated business, and I think it's probably one you'll be watching in the future, right?
Yeah, for sure. Keeping an eye on it, and yeah, want to see how they respond to the pandemic.
Gents, before we finish off the first podcast, I just wanted to give a quick update on the contrarian resources portfolio that we put together late last year. This thing has flown, and part of that is good luck in that we managed to pick these things at I think at the bottom, if not at the very bottom, then very close to the bottom, and they've just risen cyclically. So there's a little bit of luck there, but it points to a larger theme that we've brought up time and time again when we've made money from these resources companies is that a lot of value investors just automatically rule out resources, saying they're commodities, we don't want to buy them. I think it. I think that's a mistake, and there is a way to make good returns, consistently good returns, as we have out of resources, and it just requires a little tweak of the mindset. And just got to look at these as cyclical businesses, not as hold them forever stocks. And we can't use the same metrics. I mean, there's no point looking at the ROE for a resources business or the PER. You got to throw those tools away, and you just got to look at new tools. You know, um, um, Over the cycle return on assets, cash flow minus capex, even cash flow yields can be useful for specific projects. These things, return on invested capital, these things are important, more important for resources companies than they are for other stocks. And I just wanted to highlight there is actually a way to invest in mining and make money. And I think we've shown that that's possible over time. And it's a shame that my guess is that many people don't buy resources companies. And yeah, so I just wanted to highlight some of the returns that are possible. I mean, this contrarian portfolio, all of them have gone up nicely. Whitehaven Coal, which was controversially included into
Well,
that
I don't want to
portfolio.
take too much credit, but I think that was my idea. Um,
All bow to Mickey.
Definitely wasn't mine.
No, no.
no, no, copped a lot of heat
In the Dragons Den, yeah.
in the Dragons
I think
Den
I
for
just
that.
quietly put a buy on it without anyone really uh just no one wanted to fight anymore, so I just by fatigue and default it got through. But that was up about 80% last time I looked at it. This is only a matter of 2 months or so. Look, the reason for this is not to gloat, or at least not to gloat much. It's really just to highlight that there is a way of making money in mining. It takes a different mindset and different set of tools than we use for traditional investing. But I would just encourage people with risk tolerant portfolios to have a look at mining stocks, when they come up, because I genuinely think it's a source of opportunity. So many investors just automatically rule it out, and that means that the contest you're often having is you, an intelligent investor, versus some silly, spivvy, know nothing speculative retail investor who knows, who's in there because they heard it from some mate, Mickey. uh, the contest is not always with an informed, intelligent investor. It's usually with some know nothing person. So I just like the odds. I think it's easier, sometimes easier to make money in resources than you might imagine. So
Easy money. You heard it here. Heard it here.
Well, who do you want to be on the opposite end of a trade with? There's some
Definitely not you, Gaurav.
there's some great Australian investors. Or is it some guy sitting on a couch taking messages from his mate or something? So many
Well,
people
yeah. I
don't
mean,
do the
so
work.
I guess who was selling Whitehaven at the bottom there? Who do you reckon? Are they, you know?
I tell you who wasn't buying it though. Anyone. Anyway, so
Yeah.
yeah, look, returns are possible. There's a method for doing it. I hope next time we have a mining stock up, I just encourage you. I mean, I'm not saying buy it, just have a look at it and consider whether it might fit your style. All right, well, that's my rant for the day. To be fair, JC and Mickey, you'll both get a rant next time. I think that's probably fair. JC, it's
Oh,
probably.
you don't want one of my rats.
I was going to say
They can go on a bit.
maybe we can have like a shortened rant. And,
Potted version. Nah.
all right. Well, thanks for sticking around, guys. We'll try and do this again in a fortnight. And for everyone else, if you have someone you'd like to hear from, I'm looking for suggestions. So send us a message or an email, and we'll see what we can do. JC, thanks very much for your time today.
It's a pleasure.
Mickey, thanks again for joining us.
Thanks, Gaurav.
And for everyone else, thank you for listening.